Good morning, sir.
Yeah, very good morning. Just ask in the group to join everyone. I believe one person is missing. So in the meantime, yesterday you have asked, one second. So yesterday you have asked why we need to enter a negative entry, right? Here we are looking into the balance sheet. So in the balance sheet, we have seen like there is a positive entry and there is a negative entry. So why do we need this positive and negative entry? You have asked. So I have already answered this, but that was like correct thing is basically this is related to your finance side. Okay. And as per the compliance, okay, there is a, let's say every company, if someone is working and they need to go through a audit, so that audit will be done by some of the financial institutions. Okay, so financial institutions means there will be some audit companies will be there and they will be doing the auditing, like they will be checking your book records, they will be finding what kind of financial entries you are making and what kind of things you are reporting. So for all of these reason we need a, so while they are checking, okay, so as per their standard it is mentioned like you have to make one debit one credit at least to balance your balance sheet. And why it is required? If someone is going to trace it, okay, let's say someone is going to trace it from the payment side, if they are going to trace it where it is 110 positive, when it is 110 minus, so directly what will be there, let's say there is no gr is there, there is no ir is there, directly I'm going for a payment, I'm doing the payment directly. Okay, directly I can go to this vendor account, I can pay them, and I can, so I have paid this vendor. Okay, so at the time of audit, what will happen, they will trace it back. Okay, if you are doing this payment, if there is a invoice, so they will be checking the invoice if the invoice entries are there. If there is a invoice, here you can see there is here you can see there is a wrx account is there, so now they will be checking, okay, you have received an IR, so do you have a gr also, so they will be checking the gr. So right, the for this reverse tracing kind of thing, so they will be able to know, okay, this account here you are putting this on this account, so this account should be negative on here. So here you are at the time of hire, you are putting this account, so this account will be also need to be balanced, so it is balanced over here. Now they will be checking this wrx account, and wrx account they can say this is the balanced wrx. Okay, so where this entries are coming, so now they can see, okay, this is coming from this one, so we have received some material, there is a positive entry, so we have not yet done the payment, so we are on the positive side, so that's why we are entering a negative side over here. Okay, this is mostly related to the finance. Okay, no one is going to ask you like why we are balancing it out. If someone is asking you why we are balancing it out, you can just let them know this is as per the we can say as per the compliance standard. Okay, as per the accounting compliance standard, it needs to be done like every positive entry should be balanced with a negative entry, so that it will be helpful in the audit time. So they will be able to, audit people will be able to trace it out back, or they can be able to understand where the and it will be helpful for them. Okay, so this is the thing, able to understand?
Yes, sir.
Okay. So this is all about like related to your accounting, and this is related to preventing of your fraud. As we have said, let's say at the payment time, directly you are going for a payment. There is no IR or no GR is there. So that is a fraud, right? So you have not received anything. You have not received any invoices, anything. Directly you are paying someone. Okay. So you are saying I have received the product. So that is a fraud. So many of the companies, this kind of process will also happen. Okay, before SAP, there are a lot of places are there where these kind of transactions are happening, and that is a transactional fraud. Okay, to counterpart that one, or to remove that one, we are having a this kind of process. Okay, so now this is, we have seen the material is on moving average price and the material quantity in the purchase order. This is the at the purchase order, this is the quantity, 10 quantities are there, price is 10, and GR quantity is 10 pieces. Price here at the time of GR there is no price is there. Okay, so we can remove this one. So it will be based on your purchase order price only. Okay, so there is a difference is there. So here we are taking the moving average price. So in case of moving average price at the time of GR quantity will be multiplied with the purchase order price. Okay, GR quantity will be multiplied with the purchase order quantity. So now let's understand. Have you gone through once with this? Yes, no,
Yes, sir. Twice.
twice? Able to understand little bit
Yes.
of it?
Yes.
Okay. Now let's understand. Okay. So we are having a here scenario 2, let's say. Okay. Scenario 2, just hold on a second. So this is a scenario 2. So in this scenario, let's say we are having a material X, price is, we can say, 10 rupees, and this is a moving average price. Okay, moving average price. So now what happening? So at the time of PO, quantity is 10 piece, but price here we can say price here is 15 rupees. Okay, so there is a difference, right? So price is 15 rupees, but the uh, material price is 10 rupees. Okay, now at the time of GR, let's say quantity 10 piece. Okay, and at the time IR, quantity 10 piece, price 15 rupees per piece. Okay, this is the scenario. So now material price is 10 rupees per piece. In the purchase order, you have given a, let's say, higher price or lower price, anything will be fine. Okay, so we are considering here at a higher price. So higher price means you can take a positive, lower price means you can take a negative. Okay, so here the purchase order quantity is 10 and the price is 15 rupees. At the time of GR, you are receiving 10 quantities. At the time of IR, you are receiving 10 quantities with price this one. Okay. Now what will happen? So same thing. This is for GR. This is for IR. This is for payment. Okay. So first there will be, let's say, whenever you are receiving the product, it will be BSX. Okay, it will be the BSX. Just a second. This is at IR and this is payment. This is the transaction key. Okay, and okay, GL account is there, right? You can say the GL account. Okay, so what will happen? So at the time of GR, so transaction key, what will be affecting? So at the time of GR, quantity is 10 pieces. Our inventory account will be debited. So inventory account will be BSX. Okay, so how the BSX will be debited? BSX will be debited as per the PO price, because last time we have seen for the moving average price, GR quantity will be multiplied with the PO price. So now here 15 rupees per piece and 10 rupees. So what is that? 150. Okay, 150 will be at the time of GR. Okay, able to understand? We are understanding about the moving average price. Okay, for the moving average price, when you do a GR, at the time of GR, the quantity will be multiplied with the PO price, whatever PO price is there. Okay, so as per the PO price, it will be updating the BSX. Okay, so now this is 150, positive is there. Now we will be having WRX. WRX here you can say this is the inventory account and WRX is the GRIR clearing account. So here 150 will be minus. Okay, this is a positive, this is a negative. At the time of IR, what will happen? This 150 will be positive. Okay, and at the time of IR, KBS account will be so let's understand, let's keep it simple. So we are not saying that there is a taxes are there. Okay, so we are not considering the taxes. Let's understand it, this is in a simple way. So simple thing, 150 positive here, then KBS means the vendor account will be 150 negative over here. So this KBS is the vendor account. Okay. At the time of payment, what will happen? This will be positive 150 positive and 150 will be negative. Our bank account will be negative and the vendor account will be positive. Okay, this will be debited your vendor account and this will be negative on your bank account. So this is kind of simple thing when we are having a moving average price. Okay, able to understand or any doubts?
Sir, after the payment, it will become zero, right?
Yes, it will be zero, right?
Okay.
Here it will be zero. Every time it will be zero, not at the payment. Every time it should be a zero. That is why we call it as the balancing. So here also it is zero. Here also it is zero. Here also it is zero. Like everywhere it is a zero only.
Okay, sir.
Okay. So now this is a simple kind of thing. Okay. Now let's understand the third scenario. Third scenario, standard price concept. Okay. So at the point of standard price, let's say material is X, price is 10 rupees. Okay. PO, we can say quantity 10 piece, price is let's say 12 rupees per piece, or we can take the same 15 rupees per piece. Okay, 15 rupees per piece. Now here we can say GR 10 quantity and IR 10 quantity and 15 rupees per piece. Okay, let's understand this situation. So now what is there? Material price is the standard price. So I believe all of you already aware of what is a moving average price and what is the standard price. Standard price means price will be stay the same. Material price will stay same. No condition, like whatever material market fluctuations or whatever let's say market ups and downs are there. Material price will stay same. Okay, there will be no change. Okay, and moving average price means let's say the market price changes or PO price changes, our price value are updated as per that one. Okay, let's say you already aware of moving average price and standard price, right? Or do we
Yes,
have?
Yes, sir.
Yeah, okay. So what will happen in case of standard price? Price will not change. That will be a standard price. So let's say your material price is 10 rupees per piece, means from the day 1 to day nth day. Okay, n number of days. Okay, till that time your material price will be only 10 rupees. Let's say market price is 12, 15, 20, no problem, but the material price will be 10 rupees. It will be marked as 10 rupees. Okay, so in that case what will happen, right? So in that case, same thing. So this is, we can say, transaction key. This we can say GL account. This we can say at GR, IR, and this will be payment. Okay, this will be at the payment. Now, first thing, whenever you are having a standard price, okay, first transaction event key will be BSX. BSX. This is our inventory account. So at the time of GR, what will happen? Your inventory account will be updated as per the material price, because we are having a standard price and material price or material price will not change. So how much amount we can book to the inventory account? So inventory account will be booked as per the material price. Okay, able to understand? In case of moving average price, the total quantity can be booked to the inventory account, because material price can change, we are ready for it. So whatever price is changing, we can directly book to the material account. But here in this case, it is a standard price, so price will not change. So how much value we can put to the inventory account? Only the standard price account. So here at the time of GR, what will happen? Here GR quantity into material price. Okay, this is GR quantity into material price. So that is what will be there. It is 100 rupees positive. Okay, 100 rupees positive. right? Able to understand this?
Yes, sir.
Okay. So in case of standard price, we are only taking the material price, not the purchase order price. Okay. So now we will be having a WRX account. Okay. This is the GRIR clearing account. So GRIR clearing account, it will be your GR quantity into your PO price. Okay. So clearing account will be GR quantity into PO price. So it will be GR quantity into PO price. So that is 150. This is negative. Okay. Right. Able to understand? Able to understand?
150.
Yes. This will be your GR quantity into purchase order price. What is the purchase order price? 15 rupees. Okay. Just hold on 1 second, you'll be able to understand. Okay. So now this is the clearing account. Okay. Because we have to pay this price, right? We have to pay this price, not this material price. We have to pay this one. So that's why it will be GR quantity into PO price. So we have to pay this amount, right? So now what you are seeing a positive amount of 100 is there, negative quantity of 150 is there. Now where we can book this 50? So now if there is a material is a standard price, okay, so let's understand it this way. Let's say you are same thing, we can take an example. Let's say you are purchasing a pen. Okay, you know the price of that pen is 10 rupees. Okay. Now, if you buy it at 15 rupees, so what will be there? Price difference will be there 5 rupees. We can say profit loss, anything we can say, but we can say there is a price difference of 5 rupees. It may be positive, it may be negative. Okay. Let's say sometime, let's say you buy that pen at 8 rupees also. Sometime you buy that pen at 15 rupees or 12 rupees also. Okay. Right. So for the pen you will be not able to understand. Let's understand it this way. So you are going for marketing, right? So you are going for marketing at that time, that point of time. What will happen? Let's say you are buying some groceries. Let's say you are buying a packet of, let's say, mustard oil. So mustard oil is priced at 130 rupees. Let's say it is a standard 130 rupees. Sometimes that 130 rupees becomes 120 also. Sometimes that 130 becomes 150 or 160 also. Right? Able to understand? The
Yes, sir.
okay. So the standard price is 130 rupees. Now, if you buy it at a higher price, so price difference will be there. So similarly, here we are having a price difference of 5 rupees. Okay, so we will be booking that extra amount in the price difference account. So that is called a PRD account. This is price difference. You can say it as a profit loss also. Okay, so you can say, okay, this material price is 10 rupees, but I have brought it under 15 rupees, so I have a loss of 50%. You can say, okay, or you can say I have brought this under a higher side. Okay, so now here at the price difference, what will happen? I will be putting this 50 quantity. So positive 50 quantity. So I'll be booking this rest 50 under this price difference. Able to understand? Able to understand?
No, sir.
Okay. So here this is a
Yes, sir.
okay. So here there is a standard price is there. Okay. Standard price means price will not change. Okay. So let's understand it this way. Okay. So let's understand it this way. Let's say you are getting a pocket money of 100 rupees from your 100, or let's say 1000 rupees you are getting from your home. Okay. 1000 rupees. Let's say in some month you are spending 1100. Some months you are spending 900. Okay. Let's understand it this way. So now whenever you are spending a 1100 rupees also, you are not getting extra. Okay, your pocket money is constant at 1000 rupees. You are not going to get 1100 or 1001 rupees for that one. Okay, so your pocket money is constant. So similarly here material price is 10 rupees and we are saying about standard price. So in the material account we have to book only this amount. Okay, if you are buying it 15 rupees, 12 rupees, don't worry, you have to book the inventory account in 10 rupees. Okay, So 10 rupees per piece and 10 rupees, that is 100 rupees. Okay, able to understand?
Yes, sir.
Okay.
Yes,
Now,
sir.
okay. Now at the time of GRIR clearing, what amount you have to pay to the vendor or supplier? You have to pay as per the PO price, right? Whatever purchase order price is there, as per that you have to pay them, right? So what will be the GRIR clearing account? So clearing account will be based on your GR quantity and purchase order price. Okay, now purchase order price is there. Now there is a difference of 50 rupees. Now there is a difference of 50 rupees. Able to understand?
Yes, sir.
So now
Yeah, sir.
where we will be posting this 50 rupees, we will be posting this under a PRD account, that is a price difference account. Okay, okay,
Okay,
Okay,
sir.
sir.
okay. So now we will be going to the at the time of IR. So at the time of IR there will be no changes. So same thing, WRX will be your GR quantity, or we can say IR quantity into IR price. So that is 150 positive. Okay, now there will be the KBS account. KBS account will be same thing, higher quantity into higher price, 150. This is a negative. At the time of payment, this is the vendor account will be positive 150 rupees. This will be positive. Now here our bank account will be negative. We are sending money to the vendor, so our bank account will be negative. Okay, able to understand? So see, only at the time of GR there is a difference. At the time of invoice receipt and payment there is no difference. So only at the time of GR there is a difference in case of standard price and moving average price. Moving average price, we can maintain everything in the inventory account, because our price, we are understanding price will change. So if we are buying under a higher price also okay, if we are buying at a lower price also it is okay, but we have to put all of the things into our inventory account. That is how much we are spending on the inventory account. Okay, but in case of standard price, the company is saying no, this is the standard price and I will book this material under this price. So where the rest amount will go, rest amount will be going under the price difference account. Okay,
Okay, sir. Okay, sir. Okay.
okay. So try to go through this 2-3 times again today. Okay, and compare both of the things. In case of standard price, what will happen? In case of moving average price, what will happen? Okay, try to go through this couple of times and understand what are the changes are there, and this will be very crucial for you to explain in the interview. Some point of time they might be asking you, and if they are not asking you about the GL account updates, definitely they are going to ask you about this transaction event keys. Okay, so at the time of account determination we will be looking into that, but right now you need to understand these are some of the key transaction event keys are there. BSX, WRX, KBS, these are the common transaction event keys are there. Okay, and you need to understand how this is getting triggered. So maybe in some interviews they can ask you how the GR, if the material price is a standard price and you are having a variance in the purchase order, how the price will be booked at the time of GR. So you have to answer this one. Okay, they might be asking you any situation based question also. Okay, for every kind of thing you have to analyze and you have to answer. Okay, they might ask you many different questions, so they can say okay, I have a standard price and at the time, let's say in the purchase order I am having a let's say higher price or lower price, how you can manage to book that? Okay, or how will be the accounting entries? So they can ask you any kind of question. So try to go through this couple of times and try to understand. Okay, so make it under table format. Okay, make it under a table format and write it down. So if you are preparing your notes on a notebook, so try to make it under a tabulated format. And if you are preparing your notes on the system itself, you can create a table. Okay, you can create a table there also. So make a tabulated entry and see what are the changes over here. Okay, so we will be continuing again on Monday. Till then, try to understand this If you are still facing some issues, if you are still not able to understand, let me know. We will again look into this once more. Okay.
Okay, sir.
Okay, that's it for today. We'll be connecting on. Bye everyone.
Bye, sir.